The word reconciliation means different things. What I wanted to do was just give you the concept of it, the meaning of the word, and what your next steps are in your books, or what your bookkeeper's next steps could be. It doesn't really matter which software you're using. If you can be using QuickBooks, and I always speak from a QuickBooks frame of mind because that's my top accounting software, but you could be using any of those guys, Zero, Wave, it doesn't really matter. Versus the concept of reconciliation. The word reconciliation basically just means looking at one thing against another and seeing what's the same, right? So when people use the term, you have to dig deeper to make sure of what they actually mean. I worked in an environment where you would say, "Oh, did you reconcile your accounts?" And people would think that meant they hand wrote a check mark on their bank statement while looking in their check register to see what actually cleared and posted their account. And that gave them the assurance that what they wrote out actually posted from their bank accounts, and they knew their balance by looking at their statement. However, the technical term that people who work with software tools usually refers to a reconciliation tool inside that software. Every software is designed to actually help you do this in a way that keeps your books audit ready. So let's use QuickBooks as an example. QuickBooks will allow you to look at your check register and also has inside of it a reconciliation tool. That tool goes beyond just seeing what cleared. This reconciliation tool uses a circle with little check marks and the statement balance of a source document in any audit. That's what bank statements are, because they're institutions that vouch for how much money you actually have at the end of the month. That statement ending date and statement ending balance against your actual source document, your bank statement. The software design is there to help you. So the extra step it takes to make sure that things are done properly is going beyond your handwritten check mark against your checkbook. So when someone who works as a QuickBooks Pro advisor who's certified, when they say, "Did you reconcile your books?" or "My next step is the reconciliation of your monthly statement to your accounts," that is what they mean. They mean using the reconciliation tool in the software to ensure that your source document, your bank statement, matches the posted transactions. All these things are triple and quadruple checks on the transactions that posted to your account. When you do this every single month, you ensure that your books are audit ready by the end of the year. The idea here is for you to justify, record, and prove every single dollar that went through your business bank account each month. The other issue that happens is because a lot of small business owners start their businesses or will connect their personal bank accounts to QuickBooks, the actual arduous task of pulling away what is personal versus what is actually business from those. So when people get a little tired, they might just go straight to the check register area inside the software and put C's and R's on everything, thinking, "Yep, I did it." And a lot of folks do actually accept that as done. If you do workarounds in the software, then you're leaving yourself open for errors, right? Errors can work against you in several ways. One of them being overpaying in taxes because something's either overstated or understated and penalized. So I just wanted to give a little bit of conceptual information so you're setting yourself up to be audit confident each and every month and at the end of the year. If you want more audit confidence tips, you have to like and subscribe and follow.